Oil rebounds after steep drop. Underpinned by using tight substances, Singapore oil costs recovered on Thursday from a steep drop within the preceding session, supported by using tight oil supply and top summer intake, after a U.S. charge hike sparked fears of slower economic increase and much less gas demand. Brent crude futures rebounded $1.10, or 0.9%, to $119.61 a barrel by way of 0202 GMT, while U.S. West Texas Intermediate (WTI) crude futures rose to $116.59 a barrel, up $1.28, or 1.1%. Prices slipped more than 2% in a single day after the Federal Reserve raised hobby fee by way of 0.75% factor, the biggest hike on the grounds that 1994. The dollar index got here off from its maximum in view that 2002 on Wednesday, easing downward pressure on oil costs. A more potent dollar makes U.S. dollar-priced oil extra highly priced for holders of different currencies, curbing call for. Investors remained focused on tight elements and robust call for as Western sanctions restrained get admission to Russian oil, at the same time as optimism that China's oil demand will rebound because it eases COVID-19 regulations supported the fee outlook. A rebound in China demand sentiment, and predicted seasonal ramp-up in OECD oil demand into August leaves price danger to the upside through 3Q 2022, said Baden Moore, head of commodities research on the National Australia Bank (OTC) NABZY. U.S. crude production, which has been largely stagnant over the previous couple of months, edged up 100,000 barrels per day last week to 12 million barrels of oil per day, its highest stage seeing that April 2020, information from the Energy Information Administration showed. EIA's U.S. crude shares and distillate inventories rose while gasoline inventories fell inside the week through June 10, the EIA said.